Okay. Well, I mean, there have been some M&As, and the CBK has a very forceful policy, shall we say, on trying to push these M&As to try and force bank consolidation. We're down to, I believe, it's 39 banks now, and the intention is obviously to bring that down by a significant factor. We have see a lot of interest from international players wanting to come into the market. The CBK position is that if a new player wants to come into the market, they need to take over an existing bank. CBK has a moratorium on issuance of new licenses, exactly. Until recently, there was also a moratorium on issuance of representative office licenses. That's now been eased up a bit, but banking licenses, still a moratorium. So if you're a big player, you want to come into the market, the only option is to buy up a local bank. Now, I mean, we have regular clients coming in and saying to us, we're looking at this bank, we're in discussions, we're looking at doing some kind of M&A, whether it's a 100% takeover or a partial takeover. The reason a lot of these deals don't tend to go ahead is, ironically, the state of the Kenyan banking sector. When you have an international player coming in with international best practice standards, a lot of our smaller banks, especially our smaller family-owned banks, haven't been held to as high a standards as they should have been. So the state of their loan books, etc., are not attractive to an international player. Quite often the valuations which are being offered there is not an alignment on those valuations. The local players think the valuation should be considerably higher than what the international player is willing to offer. That's not specific to the banking industry, that we see that across sectors, especially where there are family-owned industries, family-owned companies, where the idea of self-worth is considerably higher than the reality. And in a free market, you know, the price is what a willing buyer is going to pay. It doesn't matter what you think the price is as the seller. It'll affect credit. We already have. It's much harder for SMEs, especially, to get credit under the interest rate caps. Now, with the new IFRS, which effectively says that where you have one non-performing loan, you do it across all related parties, you suddenly find that if in a group structure where one party has what's deemed to be a non-performing loan, and we've already moved from a situation where the CBK is forcing banks to properly classify those loans, so whereas historically those loans would probably not have been classified as non-performing, they would have been allowed, you know, that there would have been negotiations between the borrower and the bank not to reclassify them, but just to maintain them as they were. Now, under the CBK's watch, the new CBK, they're being forced to reclassify those as non-performing. The knock-on effect now from IFRS is that all group companies or related entities will also have a problem with accessing credit. So instead of just one entity having that problem, there's a knock-on effect through a business chain. So the effect is similar to interest rate caps. Much harder to access credit. From a legal perspective, we get involved really on the M&A side and the restructuring side. So where either you have the FDI coming in, you have an amalgamation, you have a restructuring, or ultimately if you have an insolvency, that's when we as lawyers get involved. Where it's internal reclassification of debt, etc., that tends to be handled from the bank, from the insurance company, from their own internal resources, less so from bringing in an external legal advisor. But you mean the court system? I think the court system has improved significantly over the last decade. Significant improvements. Not 100% there, but definitely significant improvements. The judgments we get, they are reasoned. You can rely on, if you have a strong case to prove, you can rely on getting a good judgment. That whole ecosystem creates the necessary environment for FDI to have the confidence to come in. Things like the recent Supreme Court ruling on the election petition. Yes, short term it has a detrimental effect on the economy because we're going through the whole election process again. Longer term and from an FDI perspective, it's hugely beneficial. If you're a big player, you're looking to put in a big investment to Kenya, the fact that you know that the Supreme Court is not politically swayed, that the Supreme Court is independent and is willing to make a judgment of that magnitude, it has a huge effect. Add on to that the fact that arbitration is a viable option and an alternative to going to the courts, and you will inevitably see any FDI coming in will have offshore arbitration in it as one of the conditions. That adds another layer of confidence to the system. Kenyan courts will uphold those foreign arbitral awards, and as a result, you have that confidence in the court system, confidence in the arbitral system. You know you can protect your investment. I mean, corruption is still an issue, I think, at all levels. It's not purely the court system. It has definitely reduced from what we've seen. It has definitely improved. Is there still corruption? Yes, there is still some corruption. But that's a long-term. Getting rid of corruption doesn't happen overnight. Yeah, it's a long-term play, and the movements are in the right direction, for sure. I mean, bringing new products, you have to get the regulations right. Yeah, and if you get the regulations wrong, and your first new product fails, the knock-on effect is significant. So, for example, if you look at the GEMS market, the GEMS was intended to have at least 5 companies listing a year on the GEMS market. That has not come to pass. One of the main reasons that didn't come to pass, and this is not a regulatory issue, but one of the main issues that they faced was the first company that listed on the GEMS, the pricing was wrong. Yeah, that destroyed a lot of faith in the GEMS market. A lot of these smaller companies coming and wanting to list on the GEMS market were suddenly not so confident. They backed off, they pulled away. It's exactly the same when new products are being offered by the NSE, by the CMA. They have to make sure that the regulatory environment for those new products is correct. Getting that regulatory environment, it's a slow process. We've also got the whole proposal to overhaul Securities Act, all the capital markets regulations, to bring them under one Securities Act, which has been a proposal which has been around for many years now. It's been sidelined by all of the additional new legislation that came through pursuant to the Constitution, the 2010 Constitution. All of that new legislation that had to be passed under the Constitution kind of pushed anything that was non-mandatory to the bottom of the queue. So the securities bill, etc., it all got pushed down. And there's no point bringing in regulations when you're planning to bring a new securities bill, when you're planning to amalgamate your regulators under one regulatory body. There's all these bigger plans in play. And I think the CMA, the NSE are kind of torn between the two options. Do we push through regulations here knowing that we're doing a full overhaul, or do we just try and pull it all through the full overhaul when that comes through? But the full overhaul obviously takes a lot longer and a lot more time to bring through and to get through Parliament. I mean, you also have the pushes for a commodities exchange, a grain commodities exchange, as an alternative exchange. We're also trying to persuade the government to set up a minerals exchange, because we have a new mining act, new mining regulations. They have mandatory listing requirements. 3 years, an operator who's got a large-scale mining license is supposed to list 20% within 3 years of production. So we're trying to persuade the NSE, the CMA, that this shouldn't be going on the main market segment. You need a specific minerals commodities exchange, and what we should be looking at is creating a mineral exchange for East Africa. Yeah, so that we can benefit from the Tanzanian discoveries, the Ugandan discovery. It's all happening, and if we can be the first one to put that in place and get the public awareness right for it, then we're in a very good position to persuade Tanzanian and Ugandan companies list here and access liquidity, access Kenyan liquidity for your operations. So there are movements, there are intentions to offer those, but again, it takes time. It's not an overnight play. I think the desire for the innovation is there, but historically, we're quite a risk-averse society. And the capital markets, they are the regulator, they're the gatekeeper. Their objective is to ensure that the public is protected. Now, when you have a public which is not overly educated on these products, you naturally have to, as a regulator, be quite conservative. So that's the way they have to operate. They have to protect the public. They want to make sure that these are not pyramid schemes, these new products are not being used for underhand purposes. So the de facto position becomes, let's be reserved about this, let's make sure we know what we're dealing with. That takes time. You don't get that innovation overnight, which you may get in a more developed capital markets environment.
Now,
Absolutely. We do a lot on a pro bono basis for the government. In fact, we're in the process of responding to the NSE and the CMA on a questionnaire as to why more companies are not listing and the issues we, through our clients, have seen with listing on the NSE, which is part of a feedback process for them to understand what needs to be changed, where the pinch points are, where the pain points are, what we need to do to make it easier for companies to list. We comment on all the new regulations that come out. The CMA sends them to us. And in fact, all government bodies send them to us and ask for our comments on them before they go out, which we do on a regular pro bono basis because we see it as part of our civic duty to make sure that the laws that are coming out are beneficial to the country. And so we take the time away from our usual work to make sure we give in comments, we work on the drafts, we help the government, whichever department it is, to make sure that the country is going to get the best out of those laws.